I'm the A Trader, and we're talking about moving averages, another technical tool to put in our tool belt. I did a couple changes. I'm not doing the videos when I do charts. On A Trader Live now. It's a lot of fun to get into the charting situation, and I think that we don't need the videos when I'm not doing lectures. Moving averages, I use the 20, the 50, and the 200. Of course, you can deviate from this and use what you feel best for the trade that you're making. But 20, 50, and 200 seems to be a really popular moving average system. Now, we can use EMAs or SMAs. I prefer to use the EMAs because the EMAs are weighted. That means that they're more to that current reflection. We can wait for those SMAs to come around. If you've never seen a moving average before, you'll notice the top is the 200, that's the pink. Our middle here is a 50, and that's black. And on the bottom is 20, and that's green. It's over a period of time. So 20 is over 20 periods of trade, 50 over 50, and 200 is over 200 periods of trade. So you'll notice that a 200 is stronger than the 50, and a 50 will be stronger than the 20. To get right into a scenario of how we're going to play the 200, we're going to do an above the 200 trade. We'll notice that we were below the 200 here. We made a breakout, and we saw a bounce. We then waited for it to play, and as you can see, it's playing off the 20 here. It gets below the 20 and does another bounce in this section. So that's our second bounce. We see a third bounce. This gives us a reassurance that the 200 is being used as a support line. If it's being used as a support line, we play with the Dow theory and we look for our next pullback. When we see a pullback here and another bounce off the 200 and profit opportunities. As you can see, there are other indicators here telling us that this is a good trade, being the stochastics, that bounce off the 200, a real nice pullback. But since we're talking about moving averages, let's just stick with that, and I'll put everything together in another presentation. Quada, you'll notice that these are spread apart. You got your 200 pretty far up, your 50 in the middle, and your 20 pretty far below everything. Then that 20 crosses, the 200. Still, we don't want to really be playing here. We want to be playing during the bunch up, when we're going to play on all three moving averages. So we're watching the 20 cross the 200. The 20 will then have an easier time crossing the 50 since they're all bunched up. They're much closer. And we're looking for a downtrend at this point. And here's a look at the bunch up when it's really close together. You got that 20 crossing the 200, crossing the 50 with ease, and as you'll notice, a real nice bear move. To take a look at moving averages, it's helpful for us to take a look at bear flags. You'll notice a bounce down to the 50, a bounce back up to the 20. We didn't make it. A bounce down to the 50 and below. That's a big bear flag for us to watch. We want to see that, we want to watch this play out before we play it, because that flag is definitely a warning sign for us, and this one played out to the bear side, to the downside. But as we had seen, hit off the couple pivot points, back up almost to the pivot points again, and through 20 crossing the 200, easily crosses that 50, and we see big moves to the bull side. Here's a distance again. That 20 up, the 200 up here acts as a magnet. It is pretty far away. There's no reason to be playing with the 200 while it's this far away. It acts sort of as a magnet. It's going to try to crawl up as it's crawling back down. Eventually the prices are going to try to reach that 200. We see the 20 and the 50 kind of interchanging with each other, but then we see a nice break. That break may have happened. Who knows what happened that day? Could have been news, could have been earnings, could have been pretty much anything that was good for GSVC. But what we see is a real nice banana peel off the 50 and across up that 200, and we see that price move here for a nice scalp. Then we see the 50 cross the 200, and we see a nice price move here. When I play the 200, below the 200, I like to look for a couple bounce backs just to know that that's not going to be that's not going to go back below the 200. I like to look for a bounce off the 200 again, at least 2 or 3 more bounces. But with this, with the news put together, with the 20 crossing, and then immediately that 50 crossing, a real nice scalp would have been that 50 move. And then what you do is when you get on it and you got a nice call, you ride that 20 up. Now, we're not just using moving averages. We're using other indicators as well to make these trades. But this is how you play with the moving average tool. In conclusion, the 200 is going to be stronger than the 50 or the 20. A bounce off the 50 is stronger to play than a bounce off the 20. And once you get that ride the 20 up. See what happens with that 20. Use with other indicators, of course. And we're trying to minimize our loss. When you go in and you start trading blindly, you're playing it like sort of a slot machine. You don't want to do that. You have the ability to play this with intelligence. When we're playing technically, that's what we're doing. Fundamentally as well, traders play with intelligence also. Keep in mind that I do have a slide on fundamental and technical analysis, and you should watch it. It's going to give you a better explanation of how to trade. If you're trading on something just because you like it, that's really going to put you in a bad position. You need to know things about it. You need to get into the meat and potatoes, and that's why you're going to grab all the tools that I'm going to put up for you. Keep in mind I do have a slide coming out. That slide will be on putting all the tools together on live trades.